going on, everybody? Welcome on in on this fine Wednesday afternoon for Power Hour as we speak. We're looking at the S&P right now. SPY is just about flat on the day. We got some notable things to talk about here. A prep for CPI. We'll do a stream for that tomorrow morning. So if you're coming in after the fact, or you're coming in now, tomorrow morning, 7:20 a.m. Central, 8:20 a.m. Eastern, we'll be live again, like usual, for the CPI reading. It should be a really exciting time, I guess, depending upon what side you're on. You're going to be feeling really good or really bad after, I guess, if you're long or short going into it. I'll kind of walk through what I have done, my plan, all that stuff. Cleaned out a bunch of crap, not crap, but I mean, just because it was not, I wanted to separate my mental, I guess, approach on how I wanted to play a couple different things, or just play things in general. And so I'll kind of explain that and all that good stuff at some point throughout the stream today. But let's first off dive into what you need to actually know going into this CPI. And then we'll kind of go through some possibilities. There's a lot. This is a really, really, really interesting time. I think that's, to say the least. Hope everyone is doing well as you guys jump on in. But this is a really interesting time because you've got a lot of indicators, sentiment-based. You can look at market breadth, put-call ratios. You can look at not really PE ratios. If you look at the Russell, maybe PE ratios have gotten down to times or to a spot where we could start to see this could be a bottom of a bear market at some point here, because small caps in the Russell have been getting annihilated really the past year and a half, not just the past 8 months, 9 months. It's been even longer there. But you got a lot of reasons to be thinking that, hey, we can go up, we can bounce from here, we can get a bear market rally, we can get a little short squeeze, we can get that, right? There's a lot of reasons to think that. But at the same time, there's a lot of other things that people are really scared of. Earnings recession, right? Fed's been hiking rates so fast at this point in time. It's like, oh my gosh, all these different things. So, and then you got earnings. VIX hasn't popped 40. Capitulation. People are still buying the dip. So you got all these different things kind of lining up that makes sense on both sides of the equation. And so in my view, there's a couple different, there's really two scenarios, right? There's a million scenarios, right? But realistically, we're either going up or down after tomorrow. And then we'll look at some downside targets today as we speak. Everything's a gamble. I think so. I mean, that's why I completely essentially cashed the Weeble out. I stopped gambling like an idiot in that account, and I have no interest in doing so. And like I've been saying, there's gonna be a trade on either side of this, up or down, right? If it's down, obviously, if you wait till the market open and we have a nasty flush in pre-market, you're gonna miss a chunk of the move. Yeah, could you get into the 3x ETF instead of options in the pre-market? Yeah, sure. If you really wanted to play the downside, still kind of a gamble depending upon what happens on CPI. Could dump and then bounce. Who knows? You know what I mean? But either way, there should be some, if it's nasty, there could be a lot of downside, a lot of stocks sitting at supports, looking like they could break down. You look at Apple, we're looking at SPY right now. SPY has just been kind of the past couple of days, just been bleeding out and just sitting at this range right here in the upper 350s, can't really get back up into the mid 360s. It's just struggling. So it's just kind of a lot of volume being traded right here around this 358 as we speak. Here's your kind of little wedge for now on SPY downtrend. On the top, uptrend on the bottom. We got an hour to go. We could easily see this thing unwind. It tried kind of give us a little bit of a fake out, almost, I guess, depending on how you drew the trend line, right? It got up to the top of the trend line and got rejected kind of as expected, I guess, if you're looking at the charts. But we could easily flush through, and I wouldn't be surprised if that was the case into the end of the day, just because, we're going into a CPI that I don't know how many people really want to hold into this thing. So we'll see if we get that into the end of the day. I wouldn't be surprised if that occurs the next hour, or, we could just set the stage and just sit right in this little range and be sitting at 358 going into that CPI. So that's where we're sitting right now. Can't catch a bid. I mean, I if we look at the big picture on this chart, right, for SPY, we look out and you broaden it out. I'm going to get rid of the volume on the bottom of our stream, and we'll look at the volume profile here. I mean, you're sitting on right now because we're kind of helping that right now, that I guess that volume node slightly in this mid 350s, barely though. There is not much there in terms of volume, down to about 350. And then if you break below 350, there isn't really much until the upper 330s. So I would say roughly 340, roughly or so. Those would be the two spots that I'm, would be interested in seeing, us approach and hit if it's bad, if CPI is bad. George is in the background. Like the door's open, George is in the background. He's visiting for a couple of days. We're watching him. But yeah, so we're just volume wise, I can see these as really legitimate spots. And if we get those types of moves, what's going to happen? You're going to get that VIX 40 plus, almost guaranteed, so you're going to get that capitulation. And at the same time, you're going to be sitting back and saying to yourself, there's going to be a lot of people, if we get another, hot CPI, who are really giving up on this because they're like, CPI, I've been saying it's going to roll over for months and months and months. It just never has. And now I'm done. And the reality is that what'll probably happen is it will roll over super hard at some point. Maybe that's next year. And because the Fed's going to keep hiking, insane at this insane pace, which we don't know. We can sit here and speculate how much damage it's going to do. All right. But realistically, I think we can all understand that when this comes, when this backside comes in the economy, it's going to come pretty hard, and it's going to hit, and it's not going to be nice. It's not going to feel pretty good at all. So that's the thing. This VIX, I think we're all sitting back, and I'm personally looking to be, heavier cash. I might have one put holding just in case, we get a nasty downside, but that's it overnight. That's all I'm going to do into the CPI, and that's in the Webull account. But if you're looking at like a long-term portfolio, in times like this, is not a bad idea to hedge. If you're mostly long, you don't have to sit there and say, well, if we dump, I'm screwed and, I'm going to get destroyed. You can buy a put, or buy a couple puts, depending upon the size of your portfolio and how much, you have in. Buy one put. And if it doesn't work out, okay, it's, you lose a few bucks on the put, but your other positions ideally will go up, right? The market rallies. And if we dump, well, you take the profits from the put, and if you like, let's say, I don't know what stock you like. Let's say you like Apple or whatever. Maybe I don't know. Let's say you like an S&P index, like an index fund or whatever. Then just put that money. Take the money from the put, sell it. Doesn't really matter where you sell it. You don't have to sell the absolute bottom because it was a hedge anyway. And then now you have a couple extra bucks to fund buying the dip if you want to do that in the long term, or a dividend play or whatever. Like that's how you do it. So that's what I've done in the Robinhood. So ideally, if it is nasty tomorrow, like I'm not going to get destroyed. It's not going to be like the account's going to zero, right? So that's at least my approach on that. When you are in positions that are you're net long and you're not really intending to sell these anytime soon, right? So that's the idea. But here we are. Very illiquid today. Closer Webull mentioned. I think a lot of people are thinking the same thing. All I did was I just dumped all the crap that I was in. Could always get back in, but the reality was that I wasn't trading that account. I was gambling that account, essentially, is what happened. Is really what it was. And I'm like, well, if I actually want to be serious, right, then why would I continue this crap and gamble it, right? So let's be serious. And then next month I'm going to turn it to a cash, and then so it'll be, fresh for as many day trades as I essentially want, because I'm not going to be day trading with 10K or whatever the number is in the account. So we'll see. But the edge on that account for a swing, let's say sometime in the near future, the edge that I'm going to be looking for is going to be a VIX, ideally, we'll see what happens. There'll be upside probably if we get a good CPI for a couple weeks going into the Fed meeting on November 2nd. Could be your runway. But if we look at this, if the VIX goes like this, right, I don't know what the hell the VIX is going to do. But let's say the VIX is up in here, somewhere up in here. A lot of people are not going to, first off, want to buy the dip because it's going to feel like, oh my gosh, we're just waterfalling again. So you're going to have that factor, people closing accounts, right? Like people exiting positions finally. That could be like your true capitulation. Now, could we end up going lower, later on in this cycle? Sure, yeah, it doesn't matter. But the reality is that this would provide us an edge. So this is where I'm thinking that if we get a VIX 40 plus, start looking at some inverse plays. SVIX, SVXY or 2. You could short, I guess in theory, UVXY puts, stuff like that. You could do those things. I'm not really going to be a huge fan of playing the option side of that. I'd much rather just go shares, because if you look at like an SVIX, let's take a look at the chart on an SVIX. SVXY is like a 0.5 correlation. This is like a 1-to-1. So the potential like actual upside you can see, that this is going to ideally, if we get a flush to new lows, right? And if CPI is bad, this is going to go down to new lows. Ideally, this is going to go sub $9. So let's say you start, you have to build out some sort of accumulation strategy. Don't just randomly buy your entire account or a full position at one point, because when these events happen, when you get these massive spikes, the downside is getting margin called, right? That's how people get destroyed on these short the VIX plays. They get margin called, right? They end up going in too big. The thing goes even higher and they had no plan of, or they didn't have any risk management on it or whatever. Realistically, you look at it and saying, okay, it's easy money. You short the VIX, it eventually comes down. Yes. But are you going to be positioned too heavily into that to where if it spikes even higher than you thought, are you going to get screwed? Are you going to panic sell? Are you going to get margin called? You got to be careful of that. So it's not a massive position type of idea, but a first entry on that, if that happens, enter one piece of a position and then have it like a layered entry, if the VIX goes a little bit higher. This is the type of play that could be a 20, 30, 40%, depending upon how low it goes. Could be that massive, bounce back play over time for a swing. So if we get this thing sub 9, who knows, right? Let's say we go sub 9, a bounce back to, let's say, even $11, it's like a 25% bounce on that from like, 880s to $11. And that's a pretty, I don't want to say it's a super safe, but it's a fairly, low risk, if you will, play that will just take time on not a huge position, but a smaller position, because then you're going to get that capitulation, and that's that VIX spike over 40. And in the short term, could there be more volatility? Yeah, there probably will. But eventually things will kind of even out. So we'll see. Cash accounts of the wave under 100%. Oh yeah, I mean that's the way to do it in reality. And the plan is going to be, whatever the number I am at, start with, or 10K, is going to be actually pay yourself from the account. That's probably one of the biggest things when I look back on like I don't want to say that mistakes, there's good and there's bad. When I look back upon the whole thing, by the way, SPY is about to crack, or is trying to crack the bottom of this little range. When I look back on all this stuff, I'm like, I got taken out. I'm like sitting here like, I think part of the problem was that because even though some will say that like, okay, when you don't need the money, it's when like you can be the best, right? No emotions. Part of the problem was that I wasn't taking it serious enough to the point where like I was not pulling money out of that account to pay like bills. So I'm sitting there like, oh, and it became over time like, okay, it is what it is, blah, blah, blah. And then it's like, okay, now I'm sitting here like, why am I going to do that? It's just dumb. But playing the cash account, all the focus is growing the balance. It does not, nothing else matters. I don't care. No marrying stocks. No, it doesn't matter. You are focused on growing the balance, and there's going to be a crap ton of losses, but you cut those off when you're wrong, and it doesn't matter. You're wrong. There's going to be a million other trades. So who cares? That's what I think that the mindset is at going forward. And again, is it possible that we're going to have a massive rally, in the near term? Even if we flush further, right? Could we get a big rally back up to 400 on SPY for all we know? I have no idea. And are you going to say, oh, well, look at that, you sold the bottom? Sure, fine. But that's why you have the long-term other portfolios and stuff so that you never are out. Part of that idea was like FOMO, right? I never wanted to do that because I felt the FOMO of what if this ran, or what if this went when I, decide to make that switch, which is dumb, but it is what it is. I think everyone has to go through these, phases at the end of the day. If we finally capitulate, we truly need to happen. We can start. I think so. Again, that is an idea too. If we don't, let's say we come out of tomorrow, right, and it's a bounce day or the market's up ripping, I think that we're still sitting there. You're still sitting there like, we never truly capitulated. Could we get a big squeeze? Could we get a big run? Sure. But like it's something just feels like it's missing, right? We never got that full VIX 40 plus. Not that it necessarily matters. Like it doesn't have to happen. Everyone says like it has to happen. It doesn't have to happen, right? But you didn't get those people who were buying the dip to finally go, I'm absolutely done. Now there's some, I've seen some data, people talking about like, oh, retail is starting to capitulate. So retail is starting to capitulate versus like retail really capitulating, I think are two different things. So that's kind of what we have yet to see if you want to get a bigger base or, a bigger upside potential rally. The concern though that we also have to think about though is that even if we do rally, and I'm not super sold on next year, like in a big way, maybe early next year, I don't know, but I'm not sold on the second half of next year at all. Earnings are not going to be good. How much is priced in is where we're set at, and that's the question. SPXL calls. It's funny, I actually have an SPXL put, by the way. I love playing those 3Xs because they're cheaper. You can buy a couple and average into positions a little bit better than SPY calls and stuff. You can buy further out in time, and they're not as expensive as SPY calls. So I had two of those. I had actually three SPXL can go into the account. Like literally, here's the Webull. There's only one position down in here now. I had 2 of these I got yesterday. I had 3 actually, and I just sold 1 at 450. I had an order there, and I'm gonna sell 1 more before the close, and I'm gonna hold 1 for CPI. It's a gamble, but it's 1 position on already taking profits on some, so I'm fine holding that. So that's the idea, at least for me. That's the only position I'm gonna have into tomorrow on this account, and then looking to play whatever side we're gonna go tomorrow, and there could be rally day or it could be a dump day. All right, let's see. Just holding. I think that's another factor to think about too. Like if we get this, let's see. We zoom out on this big picture. Well, let's auto adjust this guy. If we go to the past, go to the weekly charts on SPY. The weekly does not look good. Not at all. I mean, you're now kind of below that 200 moving average. Have these 2 levels charted out, right? In all reality, when this dump if the dump occurs, right? Let's say we get down to these targets, we hit the pre-COVID highs, which would be a really interesting spot. Now we could come a little bit lower too, 325, something like that could be an area. That's like the next level. If we keep just flushing, if this actually happens, I don't think it's going to be something that like is super, oh my gosh, like we're screwed. We're never going to come back. If you are potentially dollar cost averaging or snagging into this and we get a big VIX spike, it's like the end of the world everyone's talking about, right? There will be a short squeeze. There will be a rally after that at some point, which could be right back up to here and even higher pretty fast into the end of the year. I would not be surprised. A lot of sideline money might come in. A lot of big money may be coming in. And a lot of people who are in shorts, because there are still a lot of people who are in shorts, eventually will start closing those out, and they've made a ton of money. Eventually those will get closed out, which will add to some buying pressure as well. So some short covering, into that flush if we get that. So I wouldn't be super like scared to say, oh my gosh, if I'm going to start buying right now, like it's the end of the world. Even just for like a shorter term bounce or swing play into the end of the year, you got midterms. Again, I don't know how much weight you want to put on the midterm crap, but realistically, right? Do you think that it's going to be do you want the market to be absolutely crashing into November? I don't know. Like, maybe you want to see a little bit of a rally, people starting to feel better, even if it's still way down from highs, at least maybe, SPY 370, like 380. I don't know. Hopefully, like that's kind of, I feel like where you're going to want things to be. So in a minimum, if we do dump to here, first target would be to the upside. This 360, the lows of June, would be that really nice target to keep in mind. So 360 or so would be that first spot if you're looking to play that bounce, or if you're looking to take profits on any bounce and you're not going to hold that. We're not going to just dollar cost average into long terms and just leave it. So we'll see. Going to CPI extreme fear, I think 100%. Well, it would be funny if this is a nothing burger. It would really be funny because you could see how funny. Like the idea is that even a decent CPI, which we'll cover in a second too, the projections, even a decent CPI might not be like viewed as good, because at the end of the day, it's like, okay, it's still pretty high. It's not going to change the Fed's mind at all. But a lot of people are positioned short. So what does that do? How much does that change? Or what is that going to change? What is that going to mean price action wise, right? Into the post CPI trading day. Scalped all morning on SPY, including FOMC minutes. Metamaterials on fire. Let's take a look at some of these guys. I'll jump back to, oh wow, up 30% on metamaterials, man. That's a killer. Look at these. So you're getting some of these big moves on some of these smalls, man. Look at that, from 60 something cents to over $1. It's almost 100% off the lows. That's a nice little move right there. I would love to start swinging smalls again. I really would, but that grill is sitting there. That grill is going to be a play at some point. I really think so. I snuck out in the green on the small account today. Snuck out. I played Microsoft. Let's see. Microsoft puts this morning. I had this trend line here that I kind of drew in, and it broke that trend line now to the upside, but I had it off the morning puts, or off the morning, push. And so that worked out. The contracts I didn't get the best entry. I kind of entered like right in here. I could have entered a little bit higher. In a perfect world, I would have averaged in. It was the small account play, so it was kind of a one contract situation. It was like, okay, that's it. Stop out was over the highs, looking for profits down below VWAP on a flush. We got it. Took profits into there. Went a little bit further, so it could have made a few extra bucks if I had held, but again, right, doesn't matter. I'm looking to take the gains. And then I threw away like half, not half, a little bit, maybe about almost half of the gains there on IWM when I had a winner, but I ended up letting it become a loser, which is kind of dumb. By the way, IWM was pretty weak this morning, and now it's got some strength. So it was one of these moves to the downside here. I think it was this move right in here. So this is the uptrend that I was kind of seeing. We had higher lows in the 5-minute chart. And then once we broke below that, I was looking to risk it versus this 166.50, which we double topped at just shy. So that was my risk. And then I played it, and I had this flush. I had a decent flush. The problem was the contract didn't move to like I was looking for like 15 more cents in the stock to come down, which we ended up getting later on. We got that 165.50. That was my target that I was targeting. It was like these wicks down here from yesterday. But I got stopped out before that ended up happening. So I gave back some of it, but it was still green. So I mean, I'm not going to complain, but it is, just chop. It feels like I'm just kind of chopping. It's been a green month on the small account, but it's been, I don't want to say painful, but it's been just like, 2 steps forward, 1.5 steps back. It's kind of how it feels. CCL rallying hard. Always secure. Always too, when you're playing breakdowns, always take profit on the flush. It was something that was going through my head too, because I know that. I've lived that, and I've learned that many, many times in the past. But that was more so coming from like a small cap space. So when this line, I'll draw a trend line in so it's better to see. When this, uptrend broke, I was like, okay, I want to play the flush. But when we got the flush, which we did get, it wasn't as big as I was hoping for. I should have taken profits. Had the gains. I should have taken profits, and could have been a little bit of a bigger day on the small account, which means everything when you're at those stages. Every gain, every little play adds up. It really does. CCL is rallying. Let's take a look. Let's jump in and take a peek. CCL has been getting rocked. It's up 10% today. It's a killer day. Jeez, man. That thing was it sub 6? It got close. 611 or 6. Yeah, 611 was the low of the year. It was yesterday. Yesterday hit 611. Now it's rallying. It's bouncing back a lot. Gap to fill on CCL would be up towards this area right here, which is like $9. So you're looking for that would be a target if you bought this dip and you were trading it, not buying it for a bigger picture. $9 is a decent spot to lock something in. 775 was the pandemic low, so it's maybe a spot that's going to be kind of a key zone as well to watch in the near future if we get up there. Have a plan, set your levels. 100%. Yeah, that IWM is kind of it's tough because in a perfect world, right? You want to be objective, but you also there's some in trading there's never necessarily a perfect system. So while this thing comes down to this 165.65, I was looking for 165.50 as my target, right? So 15 more cents on the stock to target to hit that profit. Was that worth letting this become a loser? It wasn't a big loss, was it? Realistically, no, right? So at some point, there's got to be a better protocol of either stopping out break even when you're up decent, or at the end of the day, ideally, you'd sell something into that flush down. Did I check the lunar charts? I did not, but hey, is it a full moon right now? Isn't there a full moon? Let's see. Full moon. I'm pretty sure that's like right around now. Let's take a look. Or it's recently, it's happened, or it's happening now. Next full moon is November 8th. So that's the one that I think the guy was talking about. But we had one on the 9th. Okay, yeah. We had one already on the 9th of October. So the idea behind that lunar cycle or whatever is that this first full moon is going to kind of initiate the crash or whatever. And then the second full moon is the reversal. So we got a little window now between now and the crash, which again, it actually is funny because it's as funny as it sounds. Like, it technically lines up with the CPI. So if we did crash, like, it would be hilarious. And then, you might have that crash occur, October, bottom, whatever. And then by November, right, we're back on the upside and we're bouncing back up. And there's the next full moon. So it will be kind of funny if that's what ends up happening. Okay, CPI for tomorrow. Let me just make sure this is all refreshed and up to date. I believe this is. This guy in the middle of our screen is what we're looking at. Yeah, this is the 8.1. They're projecting an 8.1. Okay, now we got an 8.3. I believe they were projecting an 8.1 last time, and we got an 8.3, if I'm not mistaken. So they're projecting 8.1. See what we get. And of course, last time we were talking, some people were thinking, upper 7. Some were saying, around 8. Then we got an 8.3. So anything above 8.1, market's probably not going to like that. Again, we'll see what happens. But there's also the core CPI down here, which is projected to be higher than last month. Came in at 6.3. They're projecting a 6.5 on core CPI. So we'll see what happens there. We're also, is this accurate? We're going to get jobless claims too. I mean, this is just a banger of a freaking 8:30 a.m. Eastern time. Is going to be nuts. You got initial jobless claims coming out. So get ready for that. And then we got continuing jobless claims as well. I mean, you could get two pieces of news that are two decent drivers of the market. Then you got consumer sentiment coming out on Friday. We have retail sales. I was looking at and some Fed speakers. I mean, you guys, we got just we got news upon news upon news that's going to be coming out. Mr. James Bullard speaking that Saturday. Look at that little weekend action. Speaking on inflation on Saturday. So again, nothing again on this Fed minutes, by the way, which we got today. Nothing new really. Fed officials expect rates to stay higher or to stay in place. Yada yada yada. It's nothing crazy. They needed to move on and continue to maintain a more restrictive policy stance in order to meet the committee's legislative mandate to promote maximum employment and price stability. In all reality, the max employment, they don't actually want that because they need a hit to that, which I think we're kind of like there right now. But they need a hit to this to bring down CPI. Essentially, is their thought process. I don't know about you guys. Depends on where you work, but I mean, I have, at least from people that I know my girlfriend works, in I guess I don't know in the retail. She works in a space where I guess a higher end grocery store. So you can see corporate at a higher end grocery store. So she has more insight into like what's going on behind the scenes. And, their numbers are not nearly as good as they were. And number one, because their costs have gone up, supplier costs have gone up, right? Inflation. But on top of that, now you're getting the secondary effects of people are like, well, if I'm making less money or blah, 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 my job, whatever. Or, I'm worried about, this recession and all that stuff and that fear. People are not going to spend, they'll go to Walmart and buy eggs instead of go to XYZ store and buy $17 eggs, right? Or buy a dozen eggs for $8 instead of, you can go to Walmart and get them for $2. Yeah, they're maybe not as good quality, the farm, like you don't know where the hell it's coming from. Yeah, but people don't really care. It's eggs at the end of the day, right? So that's kind of the deal. At least that she's seeing on her end. They're not laying off, but they're like contracting. They're whatever. So it's you can see there's pressure there. So it's not like in full blown layoffs what you're seeing on some tech companies. But then again, it makes sense because some of these tech companies have had teams and have had people that just kind of do, I don't want to say like random work, but they're just in different projects, this and that, and like those projects are not necessary to the business. They're kind of just side things that maybe can turn into something good one day, maybe not. And so those people are getting laid off first at these big tech companies. And that's what you're kind of seeing now. So it's nothing like crazy bad, but in all reality, the Fed kind of needs that unemployment rate to come up, which by the way, if we jump over here, so this is the expectation for CPI. It's a 8.1 they're expecting. But if we look over here, where was that unemployment rate? I think I saw it down here. Yeah, here it is. Unemployment fell to 3.5% from a 3.7, matching the 5-decade lows. Now, again, unemployment rate, for those who are not like fully aware, doesn't tell you the whole story because there's a lot of people who have retired. There's people who just opt out of the labor force. And that kind of messes with these numbers. So like, what's the true unemployment rate? Maybe it's a little bit higher than maybe what it says, but still that came down and they were expecting a 3.7 as that's what it was last report. and it came in on even less than that, which is good, right? We think that's a good thing, and it is seen as a good thing from, let's say, a political side of things. But in reality, from the Fed side, they're like, well, we kind of really don't want that because that's not going to get our inflation numbers down. So Fed goes, all right, well, if we can't get inflation down through these methods, let's take them down in the stock market. Let's, whatever. That's a side thing. They want the market to come down too, because that's going to help them in a big way. So you've seen some relative strength across small caps, believe it or not. They were weak this morning. They're coming back. SPY is like now barely green. It was red maybe 10 minutes ago. Now it's green. But here we are. Buy a bunch of puts right now. If that's the case on the moon, on the lunar eclipse cycle or the lunar cycles. We got lots of hour cuts at my retail. Okay. Office Depot. Can't wait to short the crap out of it one day. That's funny. No, but I think that's kind of where things are kind of at. I mean, you're going to see more of that next year. I don't think that's going to stop. That's not going to slow down. And I think this is going to be a really scary holiday season. Not scary, but you're going to see that across retailers and stuff. There's already big problems. Not to mention people, let's say, not spending as much money, and they're going to have a lot of inventory and whatever. And so you're going to see, it's not going to be a great thing for earnings and stuff next year, you would think. But here we are. So we were talking about this. Yes. So the plan, or at least my positioning, I have this one put on SPXL. I had 3. I sold 1. I'm going to sell 1 more before the end of the day. It's up a little bit. Nothing crazy. And I'm going to hold 1 into CPI, essentially playing with the profits that I had from the other positions. Obviously, that contract is almost like a boom or bust, which is why I don't want to be holding 5 or 3 of them into that CPI, right? That one contract is going to be essentially, either it's going to lose me the profits and maybe a few bucks of what I made on the trade, or it's going to make me, couple $100, and that's all I really care. I don't really care. I'm not trying to be sitting here on a CPI and gambling. I just don't need to. There's just no point in my view on this account. So the Robinhood account, we positioned in a couple things. I have hedges. I have 3 puts. I think I have in there or whatever I have against the longs. And so if we do dump, then yeah, great. I sell the puts and buy the dip on stocks that I want to buy or reposition into what I want to buy and whatever. Probably going to be a decent amount of Soxel, I would say. That's been annihilated. This is what I do like for the bounce. When the bounce comes, when the bounce comes, it will come. There will be another rally at some point, even if it's a bear market rally. It doesn't really matter to me. There will be a trade here. So the trade idea is going to be, let's say Soxel's $7. I don't know. From 7 to 10 could be a pretty high probability. Beyond 10, I don't know. So that's where you just lock it in and whatever. So we'll see if we get it. This has just been absolutely annihilated. Just annihilated on Soxel. That's the 3X on the semiconductors, which, by the way, if you look back on some of these, though, you got to think to yourself, too, the rallies are pretty wild, too. And of course, if you buy anywhere near the bottom, you don't have to nail the bottom. But if you average in anywhere near the bottom, let's say the pandemic, let's say you bought Soxel at at $7, you see you bought at $7. It did go down to sub 4 briefly, but the thing was back up at $20 a few months later. You know what I mean? So, and that was a pandemic. Again, there's QE and different story now. But so if we get that further acceleration, crash, there's going to be some decent stuff for rebounds. TQQ as well. Yeah, TQs is a good one. Yep. I agree. It's not going to be good for the holidays. Yeah, it is kind of sad, but this is what it is. This is the thing is the way that I tried to look at things, at least now. Look at XBI is up a little bit today. It's having this little push into the close on XBI. I like Labu as well. I still do. Look, that's kind of decent, higher lows trying to be put in here. So that downtrend break on XBI will be really juicy when the time comes. Needs to get back over 83 or so. But I was saying is you kind of got to look at things like it just is. It is. It is. Like you say, everyone says, oh yeah, it is what it is. But it is. So getting super emotional and stuff, when it comes down to it, we might be dealing with a period of time that traders or like actual like traders, not investors, are just going to have a field day, because maybe we go through a lot of chop the next couple of years, just like chopping. And so your long-term portfolio, outside of adding money in, it will grow over time. But if you're a long-term portfolio, you're a long-term investor, you might not see a ton of progress, right? That maybe you saw the past 10, 15 years, since 2009, you might not see the same type of progress that you were seeing back then, which, that's part of the cycles that we go through with the market anyway. TQQ pumps. Imagine snagging imagine nailing the bottom of something like that. Like you nail a TQ bottom and you grab calls on that. Yeah, we could do some damage on that. That could be a nuts type of play. So what is TQ? Wow, that's at 18. Jeez. So if you think about this, let's see this chart on the TQs. This thing did come down, believe it or not. Pandemic. Imagine snagging TQQQ. Oh my goodness, on the pandemic lows. I mean, and holding that thing and having the diamond hands. Obviously, it's come down a lot since. But let's say you snag this thing around 10. My goodness, it went to 8. That's an 8x. That's in about a year and a half. It's nuts. Buying puts on ODP, Office Depot. Let's take a look at it. Yeah, I don't know. I haven't followed them. I don't really know much about them. Yeah, it is kind of weird. It's in this little flag almost, right? It had this gap up off the earnings from last earnings. Now you got your next earnings coming up in a couple weeks. So you're in this weird holding pattern almost. Huge flush out. Yeah, I would be. This is the thing though, is that I think, it's concerning, and I have the thought of if it happens, it's gonna be painful for a lot of people who and like we've been talking about, people who've been looking at these sentiment indicators, looking at fear and greed, and saying, yeah, it's pretty bearish, man. Yeah, but you got to give these things time to play out. And because it's bearish doesn't necessarily mean that it can't be, or it can't stay bearish in the short term. That's one of the biggest things. When you look back at some of these charts, when you look back at put call ratios, when you look back at the VIX, when you look back at breadth, oversold, you look back at these charts and you see these charts from, past couple of years, decades, right? Whatever, and you say, okay, oh, wow, it was a big reversal that came very shortly after we got down to this low. Oh, well, we're at that level right now. Time to buy. The problem is that when you zoom out that far, the chart isn't looking day to day. That chart's looking weeks and months, right? Each little tick to the right on that axis, right? On that time axis, x-axis is a lot more time than you may think. So it might suck and it might hurt for a little bit longer, but realistically, you got to let if that's how you're going to play it, you got to let that play out, truly, over time. Because it, and we have seen, we're at a point now, I think we've seen pretty nuts. This will go down in the books as to how long we've stayed this bearish. We have some records. Actually, tomorrow we're going to get another AAII sentiment survey. This should be pretty bad, I'm assuming. But we got 2 back-to-back 60-plus bearish readings week after week, which was the first time it ever happened. And this thing has been going on since the 80s, I think, or something like that. It's been going on for a long time. It's thousands and thousands of weeks of this survey. I mean, so you're talking about we haven't seen, there's data that we're getting out of this pullback that we literally have never seen. Now, again, it makes sense, right? Because we've never seen the Fed hike this aggressively, right, into an economy that we've got right now, into essentially the situation that we're dealing with right now. So any hurricanes? Yeah, let's take a look. I'm actually curious. I haven't looked recently too. Let it work out. If the market work. Yeah, I mean, that's the thing. You got to have risk management to a degree. But if you're playing macro plays like that, the best way to trade them is you got to have either a ton of time on your options, play the 3x ETFs, play a leverage ETF maybe, instead of options, or play the stocks or play the ETFs, but you got to give it time, and you're not going to worry about as much decay. The decay is what kills you. And so if you're not positioned accordingly, that decay could just destroy you, whatever. Even if the thesis plays out, here's the thing. Let's say that this whole everyone's been getting crap for the melts up, because there's a lot of people there's not a lot, there's some Right now, there's like none. But there are some people in the melt up camp, right? They're getting a ton of crap, right? But in reality, let's just say that happens into the end of the year, right? Not saying a melt up, but what if we get a massive short covering, a massive squeeze out rally, and we're sitting up at like, we don't have to be at all-time highs, but we're at 450, right? That's a massive rally. No matter bear market rally, melts up, doesn't matter. Who cares? That's a massive rally. It's a freaking massive rally. That can still play out. Like that legitimately can still play out, right? It just didn't maybe play out when some thought it would, but it took its time a couple months later, a couple quarters later, and now it plays out. And guess what? Because of what's happened, price action, no one's going to believe it. No one's going to be positioned. No one will be positioned for it. And just like you see throughout history, right? The market finds a way to mess with you. It finds a way to get you down the other side. So just like no one sees that coming now, this is the time, especially if this CPI is bad and we drop further, this would be the time. Like for it to start. Oh yeah. Like, because no one, and if you thought it, you've given up. You're out. You've given up. You're done. You don't care, right? At this point in time. So, and then just like that, whenever the top of that comes in, who knows whenever that is, if it happens, the next rally, right? You get a lot of people thinking pivot. You'll be thinking, QE. You'll be thinking Fed this, earnings not that bad. There'll be a lot of narratives to get you to think that we're all good. And then at that point, earnings start to crumble down, and we start to the next leg of the downside. Like that's kind of how this is going to go, right? Obviously, we're speculating substantially, but you can kind of see like it goes on longer than you think. And then for those people in the short term, it messes with you massively. Let's check it on the hurricane situation. I have not even checked. I don't know. I haven't seen much. It's been a really boring, outside of that one, storm, pretty boring season. Let's see if let me broaden this region out to the North Atlantic. Got something in the Gulf right now, but this looks like it's going to fade out and hit Mexico, so nothing to really worry about there. As we scroll through time, man, not much. Once you get to the end of October, I don't want to say you're in the clear because anything could happen, but the likelihood of something hitting the forming, becoming really, really nasty, really diminishes as we move through October. So there's nothing here for now. So it is what it is for now. It's just chilling. A little bit of something in the Gulf. Just a little low pressure right here in the Gulf. But that's not going to be a threat to the U.S. And it's a threat to Mexico, but more of a rain event, not really a terrible storm event. So time needs to be on your side. Deep in the monies. Yeah, that's why I like that's the way to do it when you're going to play something like that. Or honestly, people really underestimate the potential that you can do with just shares. Options have that lure because, okay, well, I want leverage and whatever, but like realistically, I mean, the share actually, the price action of shares is not going to have as nasty of a draw. Like you're not going to get destroyed. Like you could be long, like, I don't know, let's say you're long. Let's say you're someone who thinks this melt up theory actually happens, right? And you're long Apple for that theory, right, to play out. Like if you had Apple calls, like you're getting kind of blasted right now because, it's down from where it was and time's, decaying little by little as the months go by. If your theory doesn't play out, let's say you're looking for Apple 200 plus. You want to sell Apple 200 plus, right? Well, you're kind of getting screwed right now. But if you had just bought shares, let's say you bought shares and let's say you had an average at like 150, those shares right now are only down a few percent. They're not down that much. And we could easily, as we saw what happened from June to August, go to 200 and go to hit highs or go up to this level. It's very possible in that short period of time if that theory plays out. So sometimes shares really is, you got to pick your stocks somewhat, accordingly, but you're going to get bigger moves in the indices, right? If you look at just individual stocks. So Apple might not be a bad idea for something like that. But that said, look at Apple's chart, by the way, here. I don't know about you, but this doesn't look too great. I mean, you're kind of in this little wedge on Apple. You kind of have these lower lows developing here, and then you've got lower highs. So you're in this little wedge. Now, this could be seen as, in some cases, Well, it's bear flag, that's what it looks like to me. Obviously, until proven, it has to prove, right? But we have this leg down right here. Chop, 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 flagging. And then ideally, and this is a bear flag, you're going to dump to new lows. Now we have the catalyst to do it tomorrow at CPI, but again, CPI could be positive or could be taken as a positive and the market could bounce back the upside and, fake everyone out. So interesting. I would also be kind of interested to see what happens if in this CPI situation, right? If we get a decent, let's say we get a CPI that comes in at 8.1%, right? Is that going to be seen as a good thing? Because we haven't really thought about that too. Like we've been talking about, okay, well, if it comes in at 7.9, oh, great, market's going to like that. What if it comes in at 8.1? Like right where they expect it? Is that going to be a good thing because, the projections were accurate? Or is that going to be like, all right, came in as expected, still pretty high, Fed's not going to slow down, so sell off. I mean, that's another theory as well. We haven't really thought about it. Spot losing big names to Fubo. I was looking at Fubo recently. I feel like it sounds, well, I'm well aware of what Fubo is. Let's see, where is she at? Fubo's up 6% today. Look at that. Look at that chart, though. Look at that chart. Looks pretty darn good in terms of upside. I mean, let's just draw the zone in. You got a nice little zone right here. Prior gap. Look at this. Look at that. Beautiful. Gap to the downside off this earnings. I've held that area as support now. Prior resistance back in here, back in May, June. Holding it as support. So that chart looks pretty good. If that chart holds up, that's a decent long. That's a decent swing trade long. This is another example. Like you could swing, like the whole thing with the Weeble that I was playing, like you could swing and be fine. You don't have to just day trade in this market to be like able to come out in the green. You just have to respect this stuff. So Fubo, right, is the type of stock that, hey, like this is going to be good. This is going to offer really good upside if it runs. So you can be looking at, let's say you target the top of this little last pop, right? From here, that's another, 30%. And your risk is about 15%. So as long as you respect those things, like, you can still swing stocks, right? In this environment, you got to look for the right spots, find the momentum, find the plays that are squeezing, find the charts, find the setups that look good. Right? You can still play this stuff. We were talking about, I think, a Sava, SAVA. A recent one was Sava. Sorry, it's this guy on the NASDAQ. So you jump back to Sava's chart. It's breaking down a bit now, but I mean, you had opportunities where this thing ended up doing the same thing, where it held that 50 SMA right here. And what did it do? Boop, boop. 2 big moves. You had about almost 100% move from that bounce. So massive moves with a risk that was, pretty tight. The only problem, the reason why people get the other flip side of that, I guess, is that you can get killed is because if you're holding some of these momentum plays, you get caught in an offering or something like that, you're done overnight. So you still have minimal, you really can't do much about it. At least you can sell in pre-market and after hours versus an option play where you have to wait till the market opens. So there's that, but, still interesting. METV got destroyed. I'd rather do shares, even sell a leap. Let's take a look at silver. I have that silver long. It doesn't look ideal, right? It's kind of breaking down now. Let's see. No, it's still fine. This has to hold up though. If this 18 breaks, really 18.25, that breaks, I'm out. And it could, if the market crashes some more, I don't know. And it could be the case. So maybe I'll be out of that. But we'll see. As long as this holds, I'm in. I mean, that's fine. I'm fine to stay in on the silver play. Let's look at the 10-year. We haven't looked at that yet. TLT is at $100. It dipped below $100. Strong day today. We'll see if that continues. I'm patiently waiting on these on the TMFs, the 3X ETF for TLT. Patiently waiting here. This will be a decent play. I mean, at a minimum, we're going to get, at some point, well, so technically in a sense, right, the more aggressive the Fed is now, how much is priced in 10-year, where is the 10-year going to go, where bonds going to go, could push TLT further to the downside. But I mean, I think we're getting, again, I could be wrong. I think we're getting pretty close. We're getting pretty close to that max pricing in of this Fed hiking cycle. The question is going to be, what happens next year. If they thread this needle somehow and this is a softer landing, the upside is not going to be as big. If they went overboard here and we had a massive over tightening and we get crushed next year, we have deflation, we got earnings getting rocked, and the market's not going to probably be good in that situation. If that's what happens, I mean, you're going to have TOT bouncing up, and dare we say, the Fed puts us into a really bad spot and we got to do some more QE. I mean, TOT will have a little field day. So it's a contrarian play for now, but that's the idea behind it. So let's look at the 10-year. 10-year got rejected at this 4.0 roughly. So double topped on the 10-year. Look at that. 10-year double top. Let me zoom in a little closer on the past 1 month. So you popped up here end of September up to just north of 4%. Came back down 3.5 or so, 3.55. Then you bounced back to 4, got rejected there. You're kind of holding up. So ideally, you'd want to see us start to break down here if you want, yields coming down, stocks to do better. Tomorrow we'll see what happens on the CPI. Are we going to get something like this? Where are we going on this 10-year? That is the look. Silver, copper. Yeah, I mean, silver, the idea was gold. Let's see where gold is at. Gold's it's up today. Okay. The idea is gold holding these lows and going for a rally. And silver will outperform gold in that situation. So that's why I chose it. Lithium idea as well. Interesting. I mean, I was thinking this gold is that as long as these lows hold up, this could have been that capitulation sell-off and that fake out before rally. We kind of got there, and then we need to establish a higher low here and start heading back to the upside on gold. So we'll have to see if that plays out. Maybe it's not, and if it's wrong, it's wrong, right? Move on. But that's at least the look on silver. Why I like the silver play. By the way, look at this. Look at this oil. We looked at oil a couple weeks back, and we're like, man, look, oil gets up into this range. It could be a good short. What have we seen? Oil got up into that box barely. Now, it didn't get deep into the range. It got up into the mid-40s and mid-90s, 93.50 or so, and then hammered to the down. Not hammered, but 3 days of downside since. So it's getting, is it 3 days? Yeah, I think it's 3 days of downside since. It's getting pushed right back to the downside. So that's a good thing with everything that was kind of perking up in terms of the geopolitical landscape and all that stuff. This coming back down is going to be a good thing for CPI because, so far, start off the month of October, oil is kind of pushing up. If it starts to kind of flutter back off and start to fade off a little bit to finish off the month, you're not going to have as much pressure on CPI based off oil. Now, gas is up there as well, but I think gas, it's AAA. AAA, where is it? AAA gas prices. We're at 392 nationwide average, so that's been going up. That's actually pretty much the same as yesterday. It's up from a week ago, and it's up about 20 cents from a month ago. So it's up 10 cents on the week, up about 20 on the month. So that's perking back up, which is not what you want to see. Not going to help with inflation, but if it's a short-term, blip, not going to be a humongous deal, at least on the gas price and oil front for now. So if we're going to 15 before we rally, I think, who knows? Let's see where 15's at on this chart. Put the 5 here up. 15 brings you back into, is my volume profile going to load up here or is it not going to show up? 15 brings you back down to the bottom of this zone or this range from, let's see, from past a couple of years. I guess you had that blip during the pandemic and then it was a massive rally after that. But yeah, that's my concern is if we do kind of capitulate on this in the stock market, you might get everything kind of dumps. So that might break that. I don't know. If that area holds, I'm staying in, and if it breaks, I'm out. That's how I'm going to play it. So we'll see. Sold a covered call on it too. That's essentially worthless because it's like a next week expiration on the position. Helps, I guess, minimize or helps hedge your downside as well. Not a bad idea to always do if you can get 100 shares of something that you intend to hold for at least, a swing. Let's see. Qs are green. Actually, Qs are relatively strong now. Qs are up 0.3 or compared to the SPY. I guess not really. Look at this, just flatlining. Look at this. Look at these charts though. this is kind of crazy. You had these big moves down off of the jobs numbers last week. And then now you've kind of just been slowly gliding lower. It's trying to base, which is kind of funny because you'd think that as we get to this point in time, as you make new lows across the market, you'd think that there's a lot less basing and a lot more volatility, right? Why the VIX is, well, I guess the VIX is, it's up there. VIX is holding up. Look at that VIX, by the way. That VIX is just kind of, building those higher lows, kind of similar to the lower highs that we're seeing across, Qs and SPY and stuff. But why the VIX hasn't popped that 40, at least now, this pullback is really just because it's been kind of controlled. The sell-off has been pretty controlled, What's the catalyst? Something's got to give for that selling to get more uncontrolled. Obviously, tomorrow is a catalyst that could do it, to get some more uncontrolled selling and just kind of panicking and, a lot bigger flushes. So we'll see if we get that. I'll see the put calls today. Put calls, believe it or not, the put calls, I guess it kind of built a higher low relative to what we saw back in August and June, but they had a day this week, I think. Let's see if I can zoom in. Yeah, what was this on the 10th? Is that Monday? Yeah, Monday. You at one point we're playing down around this 0.64, So that's a lot more calls than puts being bought, at least on Monday. And that quickly reversed, but that was interesting. These aren't the best charts to look. These are not the cleanest charts to look at, but it's interesting to see that ratio. 200 moving average in the Qs is nasty. Kind of sketchy how the VIX. Yeah, no, it is. And yesterday was a day too. I'm not sure if you guys saw, but the VIX at one point yesterday was green. While the markets were green, I think that was yesterday morning. I forget where it was. Maybe it was pulling back a little bit, but it was still green at one point while the markets were green. Use a line chart. Yeah, that's true. I guess you can use a line chart for the put calls to make it a little bit better to view it. You broaden this bad boy out. It's still a little bit choppy, but you can see it a little bit better. So I get that. Where are the Qs? The 200 moving average. Let's see. Pull up the 1 year. On the weekly, sorry. Yeah, that's a pretty clean break. That's a pretty clean one. We have this level of support from the September lows of 2020 that were just barely we got so close to that test. I was looking for 260. Didn't really get it before CPI. I thought we'd get it before CPI. Didn't get it before CPI. It is what it is. But yeah, this thing breaks Qs. 240-ish to 230, 238, is the pre-pandemic highs. So is that going to be where you go? There's not much volume. By the way, there's not much volume here. These charts, Qs and SPY, I'm sure IWM is very similar. Well, we can check that too in a second. These charts don't look great underneath some of the supports we're sitting on. So, Qs under the 260 under the upper 250s. There's not much volume till 244, and then even that isn't nothing crazy. Let's look at IWM. IWM's got actually, you know what? Because IWM consolidated really for a while back in 2018, 2019. Didn't have a crazy, had the dip in 2018. Big rally, then just consolidated for a while. So you got some good volume support on IWM down just under 160, So there's some good support there. And that's what I would say, to be honest, if you're playing along, and I'm thinking about that too, you can look at the TQs for, if we get a flush rally, capitulation event, right? TQs, SPY, you want to play SPY, 3X ETFs, sure, Soxel, maybe, whatever you want to play. But I think a TNA, I think it's TNA or just IWM calls. The upside, this has got some good support, and I think the upside will be much bigger on IWM. PE ratios, these things, again, in a rising rate environment, are these stocks going to be the best stocks? A lot of bankruptcies, a lot more risk there. So maybe that's why. But they've held some relative strength this past, week or 2 weeks. So something to keep in mind, to think about. But I think it's TNA. TNA is this is it. TNA is a 3X bullish ETF for IWM. So this is essentially, if you want leverage on something like that, you can play a TNA if you wanted to go shares or whatever. Pull up the weekly on the put calls. Oh yeah, let's try that. Let's try the line chart on the weekly chart for the put calls. Yeah, it's a lot cleaner, not as nutty. Again, the crazy thing about this, let me get rid of some of these stupid arrows that I've had for weeks. the crazy thing about this, well, not crazy, but people also have to understand that as much as we use these sentiment indicators, like let's look at this, because you can have people who point things in two different ways, and it's not I don't intend to try to point you in a way, really. That's not, I don't really care, but because it's not like I'm going to make money by saying, oh, I think the stocks are going to go down, so go buy puts. Like, market doesn't care, right, about what I say or you say or anyone, right? But you have these kind of clear higher lows as of 2021 into 2022, right? But what do you see? You had lower highs, right, on this put call ratio, 2020 into early 2021, and then lower lows and then lower highs. So just as this, everyone is saying, well, this is really bad, and it's generally, signs a bottom is being built, or risk reward is better to the long side. Sure. But we kept going up, right? Maybe you want to call it a melt up, whatever you want to call it, 2021, 2020 and 2021. We kept going up despite everybody loading calls, and everybody was bullish at the time. And we kept gliding higher. Now, everyone was bullish, but not necessarily for the overall markets, more so, let's say, small caps, penny stocks, meme stocks at the end of it, all that crap. So people still found ways to lose despite, the S&P and the NASDAQ and the Russell all kind of going higher. They still found ways to lose in 2021. But, it's something to think about, right? We just like that. Now, again, it's caused now a pretty decent, at least from a time perspective, it's now led to 6+ month bear market, right? So there you go. Eventually, but it did take weeks and months for this to actually kind of play out, and for us to really, you saw, again, hindsight is hindsight, but you go back to January of 2021, right? That was the peak in that call buying, at least the ratio, put call ratios in terms of being swayed to the call side. That was the peak, was January of 2021. If you go and look, let's jump back to the candlestick chart. If you go jump and look at SPX, the S&P 500 index, let's pull this up. Why is it not? There it is. You go find yourself January 2021. That's back in here. Where is that? That's like back in here. So there was still a substantial rally. Another year. We had a rally for another year after that. So the indicator is not perfect, right? Again, no indicator is perfect, but something to think about. I was hoping for a huge spike at the close so I can buy puts for pennies. This sucks. You're kind of getting the opposite. Well, not the opposite, but you're kind of getting today has been a nasty range day. You want to talk about, we had the FOMC minutes that gave us a little bit of action, was this little bounce off the lows. Talk about a range day. This has been your day. If you like range trading, you got it today. SPY from 357, it gets the morning head dipped a little bit lower, but from roughly 357 up to about 359 has been your range. Now you're flushing a little bit into the close here. So let's see the last 5 minutes. What's going to happen here on SPY? We're going to make a new low on the day. It's going to be down towards 356.30. Still got about another 70 cents to make a new low. So we'll see. Looks like we haven't capitulated on SPY until the weekly RSI gets into oversold levels. Let's check that weekly RSI. Where is the weekly RSI? Pretty sure I have an RSI. Do I have it? No, I don't have an RSI. Let's see. Let's get her up. Here she is. Load that RSI in there. We got close in May and June. We got pretty much hit 30 in May and June. But no, yeah, we're sitting at 36. We're down, obviously close to that side again. Like you've been saying, right? If you want to talk about a thesis for this to play out, CPI comes in hot, major flush, VIX 40 plus. We get the downside. We get the capitulation. We get the oversold on the RSI on the weekly, right? We get that flush below the 200 moving. We go back to pre-pandemic highs. We get retail absolutely out. We get everyone saying this CPI, this inflation is never going to end. It's over. I'm out. Screw it. F the market. I'm going to go and just into bonds. Screw this. I'm going to get a better yield there and just lock up my money at whatever percent and no risk. I mean, you got the stage is set for that to happen the next couple of weeks, couple of days, right? The stage is set for it. Will we get it with the CPI? Here we are, right? So, and now again, people you can make the bet. I guess in theory you can say, yeah, I think that's going to happen. Sure, you're kind of gambling on the CPI though. I mean, let's just be honest. So we're breaking this wedge. Now, of course, we're faking that fake out move a little bit. Got 3 minutes to go. All indices close at 0. I'll do a backflip. I have not been using the indicator, but apparently TIP ETF aligns very well with QQQ as well. Interesting. I got to get rid of this. Oh, shoot. Yeah, I'm going to get rid of this put here. Can I get 460? Can we get a 460? Maybe we got 455. I got about 2 minutes to get rid of that. I'm going to get rid of it in the next 2 minutes. A little more downside and I'll get rid of it. I'll get taken out at the 460. Just squeaking a few extra bucks. And then I'm holding one. That's all I'm going to have in the Webull for tomorrow. Just because as I think about it, this narrative or this thesis, or I'll say thesis, the scenario lines up too well with the potential bigger picture, bear market rally low or whatever, short-term low, whatever. The stage is set for all, like we just said 2 minutes ago. VIX, capitulation, all that crap, getting down to some really nice supports, prior resistance levels, this, big picture. The setup is there. Oh, that indicator? I remember I've seen it on Twitter, but I haven't really looked too deep into it. CPI expectation for tomorrow is 8.1. They're expecting a top line 8.1 reading on the CPI. Make sure I get rid of this crap. 455. Of course, I'm going to get screwed here. I got 30 seconds to get out of this crap. Let's see. Will a 455 hit? Now Webull is lagging me, man. Don't do this to me. 450. All right, that's it. Take it out. 450 it is. Someone covered calls today. They decay. Oh, yeah. Especially on a day like this. We just kind of flatlined all day. I guess I could have got the 460. 5 seconds to the close because we pushed a little bit lower on SPY. So there it is. Not a new low on the day. Close, though. And the market's closed. So SPY finishes down 0.34. Not a great look going into tomorrow, but kind of breaking this trend, but also still not down to new lows. Got close. So all three indices single digit. Let's see. We are down across the Dow, finished down 0.1, NASDAQ 0.05, S&P down 0.33. That's what I'm seeing. SPXL not right now. Yeah, it isn't. There's not much volume on those contracts. Could have, whatever. Then it's 455. Yeah. SPX. Yeah, I mean, the Qs are better. The leverage Qs. Probably should have, in theory, played that. But it is what it is. I figured that I like playing the puts on the 3X ETFs more for the decay factor as well. On top of the lever, on top of the move of downside. So that's why I figure instead of playing, you could play Qs, you can play SPY, you can just play whatever SPY puts. But I was able to get a couple instead of just buying one. So I figured that was a better way to layer in and handle it. But so with that said, Qs finishing pretty flat. Yeah, 0.02 on the Qs is where it finishes. I mean, that finished towards the lower end of the range this afternoon, but these charts, they are primed for some big moves. Primed. Apple must have looked pretty bad to close off. Yeah, not new lows, but got close. that trend has been pretty nasty there in Apple. So yeah, so tomorrow, 8.1 is the expectation for CPI. We'll do a live for that again, like usual. For the CPI year over year. Core CPI is expected at 6.5. So we'll see what we get on those two numbers. And that's going to be at 8:30 Eastern time tomorrow. Fantastic week. Well, that's awesome. No, I mean, because this has been because to be honest, if you think about it, look at this week. I mean, so far I guess it's only Wednesday, but I guess if you go back into last week, maybe if you're also playing off of last week, it hasn't been a massive range week. So it's been it's been about almost a $10 range on SPY to the downside. So it's not bad. There's some range there for sure, but that's when we don't have a clear trend, when it's kind of choppy, when you get these big ups and downs. Because we had some, interesting moves off of making new lows. It seems like every day we make a new low and then rally hard. Make a new low, rally hard. We never get that flush. Everyone's waiting for that flush. So if you've been playing puts, I think a lot of people get caught into the sucker trap of hammering puts into the lows or hammering puts as we start breaking new lows, thinking that we're going to get that big flush. And if you're not quick, you can see that we got these big rallies back up to kind of check you, which I know a lot of people have been getting screwed by. 4K and Strangles. I thought about it, but I figured, to be honest, I'm not really super interested in trying to. I was looking. I guess I could have looked at something this afternoon, Strangle wise, but we'll reconvene after. I think this post CPI, we'll have a game plan. At least I'll have a game plan for tomorrow, and we'll do live, and we'll be live into the open probably. I have a rough game plan for tomorrow, and the idea. Not really interested in just chasing a move. So if we come in and it's bad, I'm not interested in chasing that. There'll probably be some pretty big downs or decent downside to have anyway. Same as the upside, would be cautious to chase the upside on that. So we'll see. But there you go. Buy calls on chickens doesn't eggs till $5. Posting the trades on Twitter. All right. Buying Wingstop. Doing diagonal spreads, $200 a piece. Let's check. I'm going to be kind of curious where these SPYs closed, where these options are closing out for tomorrow. Or for this. Alrighty. I'll wrap things up pretty, relatively soon because I know market's closed, so it is okay. How much more are we kind of talking about? We can shoot the shit for a while, I guess, too, which is sometimes fun. We tend to do that for Friday afternoons when we tend to do that more. Just hanging out for an extra half hour. All right, so, these are still pricing in a pretty sizable move, man. So they're going for $5. So at the monies, so you're looking at the money calls and puts are around $5 a piece. So, and that's, we got 2 days. You have 2 more days until expiration. So there's still time on these things. So there's a little bit of that. But, you got a decent move priced in. So you imagine this. Imagine after all this CPI comes in and then just flat. We finish the week flat. We've imagined finishing the week at 360 or 350 on SPY, right in this range somewhere here. Tomorrow gonna be doozy. Thanks for coming out. Appreciate it. You guys enjoy as well. For everyone who's dipping, have a great rest of your night. Get outside. Try to do something fun and productive. But so these SPYs, we're looking at these calls and puts. They're sitting here at $5. So what is that? You need a move to 352, or let's say you're buying puts on these 357s. You got to get a move to 352 or more just to be good in terms of from an intrinsic value standpoint on those options. Obviously, if we opened up at 352 tomorrow, you're going to be up pretty big because there's still 2 days of time. But so I don't know. It's interesting, and you'll still make money if you get the direction right. You'll make money. Don't worry, you'll make money. But yeah, it's going to be an interesting one. I'm curious. We haven't really had one of those where I feel like we've burnt both sides. Both sides get screwed. But maybe this is the one. The CPI is the one that kind of comes in and crushes both sides' hopes and dreams. Those who bought calls and puts for this week. So we'll see. But I appreciate you guys who are jumping on in. When you get a ton of Jeppy, you can just stream all day. Yeah. When I just sit back and I'm sitting on the Jeppy, a couple thousand shares of Jeppy, and it's just cash flowing me, rent, bills, everything for the month. Yeah, for the that would be fun. Retail put ahead right now. I look for Friday. I wouldn't be surprised. I wouldn't be surprised if we do go up. Yet at the same time, a lot of these charts look like capitulation, man. If you're asking for it and you're looking for it, we are like, this is one CPI to nail us in and get that capitulation to kind of get it over with. I mean, realistically, chart-wise. And we get a couple bigger breakdowns on some of these charts, and we got it. And I think that we're going to get that VIX spike over 40 is, I want to say guaranteed, but if we dump to, sub 350 on SPY tomorrow after a CPI that comes in hot, let's think about it. VIX is probably going to push up to $40. It's sitting here at 33. Look at the VIX. It's just sitting up at that range. One more big flush, and you got 40 in its sight. And then at that point, that starts to line up with, hey, no bear market rally or no bear market's ever bottom with a VIX over under 40. Then you start thinking, okay, if everyone starts jumping in and money starts coming back in alongside eventually over time, whatever, big money, retail, doesn't matter, and we start to rally back up, and you think to yourselves, well, VIX pop 40, bear market's in, right? Bear markets are, we bottomed out. VIX pop 40, there we go. Then people start thinking that, put call ratios, like, okay, now they're going to look at all these different indicators and say, hey, we're sitting in a pretty interesting spot. So I don't know. We got the setup is there at the same time, until proven otherwise. This VIX is at resistance, So you got the juice, the potential to get us to pop through, but obviously it needs to play out properly. 1,000 shares of JEPI would be a $500 $500 a month plus 10 contracts. Yeah, no, yeah. I mean, I think realistically we're going to go into a time where trading / dividends will be really, really valuable. What do I say? You think that's two completely opposite things. But if we are in a range for a while, until we're talking years, let's say we're in a bigger picture range for a couple of years, your long-term investments are going to kind of it's going to be kind of stagnating, right? It's going to kind of suck. You're like, yeah, man, it's not really, doing what I thought it was going to do, or it's taking a long time, or the market's being this and the Fed and this and that, and there's inflation, there's this, and we're kind of bouncing around, and we got this. So you got all those different things, which is a trader's dream, because a trader doesn't give a crap about what the hell happens, over the course of weeks and months on a given stock. They're coming in every day saying, hey, how can I grow my portfolio today or tomorrow or this week? So you got traders that will, in reality, kind of not care or thrive. And then dividend investors say, well, at least I'm cash flowing. I'm cash flowing, I'm reinvesting dividends and building up more of a larger position size in certain stocks. And that could be where the environment where we head, big picture, in the next couple of years. And some still say that we have a long way to go down in the downside market. Maybe we do. Maybe we do. Right? We've given back about 25 or so, a little over 25% from the highs. Could we give back 50%? Could we give back even more? Yeah, sure. Probably gonna need some more catalysts to get us there, right? It's not gonna I don't think we're just gonna glide down. You need to see inflation staying around, staying a lot stickier, or we need to see something happen with this situation in Russia, Ukraine to get us to do something like the 50% downside. It would be a lot, right? Probably takes a long time if we ever get there, but it's possible. 60 sales range. Let's take a look at if we jump back on SPX all time and jump back. It's not going to be as clean if we go, it only goes back to, it goes back to 1872. I didn't realize it went back to 1872 on the charts. Jeez. Let's take a look at this range. So 60s, let's kind of circle this up. 60s would be like this. Yeah, I mean, the general trajectory, I mean, I guess really the 70s maybe would be more so of a thought process. This could be what we're looking at maybe. I don't know, something like that, right? 60s, same thing, either way, right? Not like, over time you got, you went higher. But look at these moves back here, right? In the 60s and 70s, or the early 70s, early to mid 70s. You came down on the S&P from the highs. You dropped about 35%. So we're not there yet, but, it doesn't mean we have to do that. And then you had a pretty big rally for a couple of years. So then you rallied back up about 70%. And then you came back around and you dumped, even bigger, and you dropped, let's see, let me adjust that. Drop from 73, early 73 into 74, dropped about 50% on that one. So that would kind of line up with some of the melt up theory thesis that some people have. You know, if some are calling for this melt up, right? That would kind of line up with that idea, right? Where we get this correction, you know, pull back, right? Push up to new highs. In the theory of the melt up people, they think that it's going to be much more vertical. Not going to play out over that long, but whatever, new highs, and then a bigger bear market, you know, later, right? So that's, to be honest, maybe that's something we're thinking about, right? 60 or the 70s time frame. In the grand scheme, who really cares if you're buying stocks or you're buying, you know, dividends plays or whatever that you're not going to sell or you don't intend to sell? It doesn't matter, right? You know, whatever happens, happens. It doesn't really matter. But we'll see. JP will do really well. It'd be fun to have. I mean, that would be a lot of fun if we can get a fat position in JEPI over time. Applied Materials cuts forecast. Sees Q4 net sales about 6.4 billion. Sees Q4 just EPS 1.54. Yep. I mean, that's AMAT, right? Okay, let's take a look. Let's jump on in to see where that thing is getting hit. I mean, you're going to see a lot. I think you're going to see a lot of that stuff. So far, not getting hit too hard. It's only down 1.5%, whatever in the after hours. Although I'm not sure how many people are paying close attention to these earnings. We'll see where this stock has been. Oh my goodness. Yeah, I mean, I remember this stock was super strong. It was still relatively strong in, you know, it was still holding up pretty good throughout the bear market until recently. It's been getting destroyed. That's a funny one. I remember people playing that one or like that one a lot. This thing, yeah, it's getting close to those pre-pandemic highs. Yeah. Down to like 69 or $70. It's getting close. Maybe we'll see that one if the CPI adds to it. We'll probably see that tomorrow or Friday. With that said, I'm going to wrap things up, guys. I appreciate you for tuning on in. And we'll be live tomorrow morning for CPI, so stay tuned for that. 7:20 Central, 8:20 Eastern time is what I'm planning on trying to be out for. That is the plan. And we will talk then. So thanks so much for watching, guys. Peace out. Hit the thumbs up button on the way out. I appreciate it. And I'll see you tomorrow.